Well, the world, of course, is changing fast and being powered by companies. A lot of them, folks, let's face it, we never heard of. Now, the good news is many of them are also publicly traded. So let's talk about some of these sizzling stocks with the IO Fund Tech analyst, Beth Kindig. Beth, your IO Fund newsletter, you've shared ideas. You've had Roku up 1,100%, Nvidia, we just talked about that, over 500%, Zoom. What's the process that your fund is using to discover or find these ideas so early on?
Yeah, that's a great question, Charles. And when I first started this, the private markets got to have all of the fun with tech. And now there's so many tech companies that are public. It's a great time to be a public investor because there's so many gains in tech growth. We see tech growth as being a very, very specialized field, something that you cannot train financial analysts on. And that's because it's product that is really leading these companies in their growth. And that's something you really can't train on. When I got started in 2010, it was around the time that tech overtook oil as the most valuable industry in the world. And being in Silicon Valley, very competitive. If you're still around today, you're probably very good at what you do. I've looked at thousands of companies, so taking that experience over to the public markets was key. We also have a portfolio management style that reduces risk, and that's a very big deal in tech growth. So if you have your losers, they're not performing well, you've got to be willing to cut them and move that money over to your winners.
Now, sometimes that's easier said than done because these stocks can be extremely volatile. There have been many times I've had a hot, sizzling stock. I've taken a big haircut on it, and then just months later, I'm crying like, what the heck? Why did I sell it? You know, why did I stick with the old adage of selling your losers when they come back so quickly? So that's a tough one in this arena, isn't it?
It definitely is. So Asana is a great example. It's the cloud winner of the year. It's up about 300%. We held through 40% drawdown. So it's, again, it's highly specialized. It's more than a full-time job. It requires daily, hourly monitoring, and then also just truly knowing your products and your strong management teams. A strong management team taking market share can usually overcome a lot. Roku's a great example. I constantly have heard since entering the stock in 2018, what about Google? What about Amazon? What about Netflix? You know, et cetera. And the issue with that is Roku's still the top operating system in the country. So we kind of have this idea that these smaller players can't take market share, but in fact, the opposite is true.
You know, of course, years ago when you talked technology, it was always Intel inside, so you kind of knew. Right now, all these names that you're talking about that are powering all of this, we love the end product, but we don't know what it is. What's on your radar now that nobody on financial TV is talking about?
We really like Bitcoin miners right now. We think they got way too beat up when Bitcoin took its breather over the summer and into the early fall. We love the catalyst that China's loss is our gain here in the United States. A lot of Bitcoin miners are moving, all Bitcoin miners are moving out of China and relocating to Texas. We think that's going to attract institutional interest. And they obviously hold Bitcoin on their balance sheet. They're mining Bitcoin, so that will add to their balance sheet. And they've been beaten up. So we like that combination of China giving up a very profitable business.
Beth, thank you very much.
Sending it our way.
Yeah, congratulations on your success. We'll be coming back to you because I've been looking at these Bitcoin miners. I've been trading them, but I really think you're right. I think I need to find one to buy and put on the shelf and don't worry about the near-term volatility. Thanks a lot.
Agreed.
All right,
Thank
we'll
you.
talk to you again soon.